Welcome back, YouTube. So in today's video, we're going to be talking about a potential reversal we can have this upcoming week, how that may come about, and the numbers that we're actually going to need to hit in order to have a trend reversal. So for those of you that know, the chart that you're looking at here is the NASDAQ. And as you can tell, we are roughly around 6% from being declared in a full-on bear market. The official number you need is around 20%. And we have so far corrected around 14%. You also can see here our moving averages. We're about to do a death cross as well on the actual moving average, on the actual NASDAQ here. And you can also see that the NASDAQ has now fallen below its 200-day moving average. This is absolutely terrible as far as for like the market. But we do know that this week we do have the Fed speaking on around the 25th, 26th, and they're going to cover like market transparency and amongst other issues. Now, the reason I started the video off with the NASDAQ, because I know that typically speaking, the Fed, for the most part, they do not care, at least in a positive way, for anything to do with crypto. But adversely, as far as for the money that's flowing out of crypto, I know that that is mostly institution, and it is directly linked to what's going on in the stock market. And that is the overall threat of the money injections being removed from the market. And we do have this week a lot of the catalysts coming out, and we're going to have fourth quarter earnings being revealed from a lot of the companies from last year. And we see what happened. Let me just go back in case you guys are unfamiliar as far as to what happened with Netflix when they pretty much released that they had a decline in pretty much overall memberships. You can see that they pretty much tanked down, and people were putting puts, and people actually made like a fortune, putting puts and stuff against like Netflix last week. So depending on these fourth quarter earnings, we can actually see further crashes and stuff like that, depending on the overall company's performance. So what does this mean? This means that the market is really sensitive. And this also, the biggest threat here, let me go back to the NASDAQ. The biggest threat that we're going to have here is the fact that we have fallen around 14%, and nothing technically has even happened yet. Technically speaking, this is all hearsay, not necessarily hearsay, because we know it's a fact, but technically speaking, this is all just fear of the potential of what might happen. And we're down 14%. So God forbid this actually happened. Who knows what the actual correction percentage will be. I'm guessing that it'll be a lot higher than 20%. So the most interesting thing here that we've seen is the Fed try and do something similar to the amount of money that they were injecting, that they kind of announced that or hinted that they may be cutting back or cutting off QE. And this was around 2018. Let's see, this was around like September 2018. We saw what happened here. And then, of course, they did not want the overall market crashing or pretty much us slipping into a recession. So they kind of just try to switch gears a little bit. And then we pretty much just resumed on our upward trajectory as normal. And then, of course, we had the pandemic here, which caused the market to dip down, and it dipped down below its 200-day moving average, which was bad, like really bad. And we can see here now on like the year date, we're down below our 200, but 5-year was still well above it. But even on our 50-day moving average for the last 5 years, you can see now where we are actually below that as well, which is very alarming. And it's very few times where we've crossed both of those lines and we didn't have a further correction. So I do believe that if the market goes untainted with additional money being put in, we are in fact set for further corrections. But how do we tie this in with Dogecoin? The crypto market is adversely, the Fed meeting that we have on the 25th and the 26th is going to pretty much, I believe that we have the potential for them to kind of fly in and say, okay, well, and try and do some damage control. And we may get a similar reaction here, which is basically a bounce where they remove some of the fear and put the market at ease. So there's a great potential that they may come out and pretty much debunk some of the information that's been put out there. I know Goldman Sachs predicted that they were planning on doing around 4 interest hikes this year. And you can see possibly like you're going to see a reaction in real estate and the amount of foreclosures and the ability to borrow money to buy homes. And ultimately, again, a lot of the capital that's in the market is going to evaporate as these hedge funds, as these institutions rebalance their portfolios. That's why we see the adverse effect in crypto and something like Bitcoin. Of course, Bitcoin is going to drag the entire crypto market. So you're going to have Bitcoin, Ethereum, Dogecoin. All these coins are going to be testing their lower support levels as the money leaves the market and rebalances. So if the Fed does come in and do damage control and say, hey, we do need to get inflation under control, but we don't necessarily want to go into a recession. So we're going to cut back on the amount of money overall being injected into the market, but we're going to do it much more slowly. We're not necessarily going to cut the money out cold turkey at the end of Q1, which is around March or April. So what that can do is that can restore confidence, primarily by the institutions in the market, and say, okay, well, we have more time now, and we don't necessarily need to rebalance our portfolios just this second, and that can bring some ease to the overall market. So this can cause a potential rally in the market or bounce from where we are now, and we can reach some form of stability. So the question at that point remains, okay, well, for our crypto like Dogecoin, Bitcoin, what numbers do we need to hit before we actually have a full-on trend reversal? Now, taking a look here at Bitcoin, we'll see that we're pretty much setting up to do another lower high. And we do have the ability here, because like I said, as far as if we don't get that bounce, if there's no resistance put here and we are technically filling this gap, then we can kind of hang on until around 30,000. But technically speaking, to be a full-on trend reversal, we're going to have to fill this gap that we have, pretty much the one that we slid down, and up here to some of this upper support level. So basically, we're looking at around 42 to 44,000. So until Bitcoin hits those numbers, it doesn't have to necessarily be like a greenward spike or one big candle, but until Bitcoin comes up and retests these levels here and breaks above it, we cannot say that this is a full-on trend reversal. So as long as we are down or trending sideways at these levels until we break out this potential bridge here again, but it doesn't have a test or anything, a second test. So I can't say that it's going to be respected, but until we break above this 44,000 level, come up here and test some of this previous support, then this is not going to be categorized as a trend reversal. So we are still in position right here. I do believe we can get a bounce, but based off of the trend that we do have here, we are looking to set up another lower high. So even if this bounces here, that doesn't necessarily mean that, oh, it's a Bitcoin rally and it's all over. We could very well be doing a three-peat on the lower high trend that we have. So now let's take a look at Dogecoin and see the numbers that we're going to need for a trend reversal. So I'm going to go to the 1 year, and I pretty much have it mapped out, and I called this earlier, let's make it a little bigger. To do a trend reversal, we're going to need to break above this line, and I do believe, I said this about a week ago, I do believe we're going to come up and test this line, but unless the Fed says something relatively favorable, that they're going to keep putting money in the market basically and keep propping it up, we're going to have these major corrections. But in order for it to break a trend, we're going to have to break above this overall line here. So technically speaking, we can say we can come up and test like the 21, 22 cents line, but based off of the bridge here, we'd have to, at least within the next week or so, next month, we'd have to break above around like the 17-cent mark for us to say, okay, well, we're going to establish a new trend at that point. So we're going to look at 44,000, 42, 44 for Bitcoin, and around 17 cents for Doge overall, in order for us to say, okay, well, we have the potential here to be establishing a new trend. Overall, what does this mean? This means that you don't necessarily count on the Fed coming in and saying that, okay, we're going to keep putting money in there, because ultimately that's not a bull run. We know that the market for the last year, let's take a look at the NASDAQ here again. We know that this has been propped up by funny money. So I gotta go to stocks. So, but we know this has been propped up by funny money. So this here is really abnormal and a very aggressive incline here. So we'll know that, okay, so they've been saying, they've literally come out and said, hey, we've been putting around 120 billion a month into the market. And so, we have rapid inflation now, we're going to have to remove it. So the question investors have to ask themselves is, what does the market actually look like without these interjections of cash? I think that is going to be the biggest catalyst for going forward. And once you establish what these markets actually look like, or really when we hit like an equilibrium here of these institutions and stuff rebalancing their portfolios, that's when we're going to kind of go get an idea of what the market actually looks like without the steroids or the creatine that's being pumped into the market here to fluff it up to make it look like it's stronger than what it actually is. So we're going to actually get an idea of where we actually stand. So, and that's going to happen at some point, right? So they can't, if they keep interjecting the money, we're going to go into hyperinflation. We're going to have this consolidation at some point. Last time they kind of prevented it. They've done this a few times in the past where they'll change course because they don't want the market to crash or because of, COVID or some external factor that's going on. It's not favorable to have a recession at that point. So we're going to inject money, but it's going to happen at some point. So we can get a potential bounce this week, this Tuesday, Wednesday, based off of what the Fed says. But ultimately, even at these prices now, we do have the potential to test some of those lower support levels. But for me, to get the best deal and to not necessarily try and time the market, I'd take capital and start spreading it out. As far as sort of buying weekly or whatever the case may be, so that you can capitalize off these best projects just in case they do come out and say, hey, we're not going to cut the money off, and we just kind of get like that rally going the other way. You're not necessarily missing out on profits. You're not necessarily missing out on some of these lower price targets here. But in any case, I do believe that regardless of what happens, because they're kind of pushed with inflation, that we're probably going to see us go down and test some of those lower support levels here. But again, we'll touch base again like Tuesday and Wednesday to kind of see what direction the Fed is going. But that is the potential that we have to get a bounce. So for those people that are trading and short term in the stocks, depending on what kind of bounce that we actually get, expect them to potentially sell off, especially if it's a decent bounce. You can expect for some of them to take profits, especially if things are not looking good and they simply want to exit. Or for those of people that have got their DCA down, let's say some people got their DCAs down to 14, 16 cents or something like that in Doge, and we get like a decent bounce, expect them to take profit to break even or exit, if they don't want to be in the coin anymore. So you have to kind of prepare for that. I don't imagine a lot of that will be going on because I don't think that we'll have that great of a bounce, but it's just something that we have to kind of pay attention to. So those are the catalysts to get a bounce for this Wednesday. So I just want to say thank you before closing out. We are now celebrating 38,000 members strong. This is incredible that we're now officially less than 2,000 members away from 40,000 subscribers. So I'm grateful that you guys are enjoying the content and the information that is being put out. So I'm looking forward to having a very prosperous 2022 with you all and growing alongside you as well. If you found value in this video, please consider liking the video and subscribing to become a part of the channel. And also don't forget about BlockFi. I have a link in the description, but if you open an account with them, you can get up to $250 in some of your favorite crypto, including Bitcoin and Ethereum. I appreciate all of you. Thank you. And until next time.